Now, with the start of the interbank foreign exchange market, there's been a lot of conversation around particularly the 2016 budget. They say that now we have to have new price assumptions for instance, oil and gas, for the oil benchmark, which was actually put at $66 per barrel. But let's talk to Dolapo Oni to get a clearer picture about this and, of course, talk about how this new pricing of the naira to the dollar will be affecting the benchmark for oil. Good morning to you, Dolapo.
Good morning, Harriet.
Thank you so much for joining me on the program. Now, yesterday, the market effectively started, that interbank foreign exchange market effectively started, and we saw by intraday, we had a high of about 288, but the market closed at 281 naira 25 kobo to the dollar. Talk to us, how do you think this new pricing by investors of the naira to the dollar will be affecting, for instance, our benchmark in the 2016 budget?
Okay, first of all, thanks for having me. And I think it's a good move for us to move towards the floating rate for the naira. I think the good thing about this is that for the petroleum side of things, each dollar we earn now translates to more naira for the government. So for the various state governments, as against changing their naira at 199, it's 281, and if at this morning 286. So it's more naira per dollar, that's one. The budget is currently benchmarked on 197 naira per dollar, which means whatever revenue calculations have gone into the budget, we now need to even adjust it by this 40-45% bump in exchange rate differential that we have seen, which would need to boost the revenue profile, and perhaps we may not need to borrow as much as we plan to borrow again.
Well, let me just quickly correct myself. It's actually $38. That's what the benchmark is for us in the 2016 budget. But then, you know, in line with what we're seeing in terms of oil price volatility is still persisting, does it look like Nigeria is coping with it, and also looking like we're going to be able to have any reserves for ourselves? Well, we're going to try to reestablish a connection with Dolapo again. We seem to be having network issues. But Dolapo Oni is the head of energy research for EcoBank, and he's talking to me on, of course, the new Forex regime and its effect on our oil and gas market. And he's quite optimistic that it is a good thing that the naira has been floated. But then in the coming days, something needs to be done with regards to the benchmark for oil that is in the 2016 budget. It's at $38 to a barrel. In early trade today, we see oil prices hovering around $51 a barrel. And well, we seem to have Dolapo back here with us on the program. Thank you so much, Dolapo.
Okay, thank you.
So now we have you back on the show. So take off your, take us back again to when you started talking about the oil price volatility, which is still persisting, and how does it look like Nigeria is coping with it, especially with the way we see the naira and the dollar trading?
Yeah. Okay. So that's where I think this is also a good move, because with the exchange rate floating as it is right now, it helps us to adjust for the in terms of revenues, on the revenue side of things, it helps us to adjust a bit for the drop in earnings, because each dollar is translating to more naira. So even though we set a benchmark of 38 and production is not up to the level in the budget of 2.2, we're currently doing about 1.4, 1.5. The additional bump in terms of naira depreciation is helping to sort of buffer revenues a bit. So we're sort of coasting along, and I think for the rest of the year, if oil prices continue to rise and we're able to see $50, $55 oil, we should be just about okay.
But then the market is slowly eroding the supply glut, and as you rightly said, oil prices could continue to trend higher in the second half of the year. Right now it's trading around $51 per barrel. What is your view about all of this?
Yeah, you see, there's still a worry that, of course, the market will eventually recover in terms of supply. But I think we're still barely okay, because as we start to enter the other half later half of the year, summer driving season, the winter, refineries coming out of maintenance. We have the Chinese seaport refineries also increasing their demand as well. There are several factors that will help to sustain prices in this $49 to $55 range, and I think that's where we'll be. And if we're there, we should be comfortable. The only side that will suffer is on the downstream, where the cost of products will start to increase.
Increase by as much as how much?
Well, I think if you've seen what's happened with the exchange rate as well, currently settling around 285. If it goes above 285, then it may not be feasible for some parts of the country to sell at 145 and still make a profit.
All right. Thank you so much, Dolapo, for joining me on the program this morning and sharing your perspectives with us. Dolapo Oni is the head of energy research at EcoBank. We're still talking about commodities, but we're turning our attention away from oil to agri-commodities. And Ada Akunubi, who is an investment officer with financial derivatives company, joins me after now. Welcome back. You're watching Business Morning on Channels Television. We're talking commodities still, and Ada Akunubi, who is an investment officer with financial derivatives company, joins me now on the program. Good morning to you, Ada.
Good morning, Harriet.
So taking a look at the figures, you folks sent in from FDC, we see that domestic commodity prices are beginning to, decline. Just give us a sense of where the market is now.
So most domestic commodity prices will start reacting to the new Forex policy that is out there. So you can imagine having to source for the dollar at 350 or 370 as at last week, but now seeing that the parallel market has appreciated to about 340, and this is specifically for the items on the 41, the banned items, the banned 41 items. So the naira has appreciated then. So what you're having is a lot of traders are now offloading old stock because it's quite competitive and it's a game of margins. So if you offload old stock and a trader goes to source for a Forex at the new rate of about 280 or 290 or 300, you see that these goods become cheaper. So you have a lot more supply, and that's why prices are coming down. Specifically for rice, we know that there's a rice crash in Kano, and Kano is it's the major distributor of rice. This is because the naira appreciated against the currency in which it's imported in.
Yeah, so we've seen rice, that's 50 kilogram bag of rice.
It's gone down to about 12,500.
Okay, but here in Lagos it's still at 13,000, and in Onitsha it's about 12,800.
Yes, you have to factor in the transportation costs. So with higher diesel prices and all of that.
So I was actually going to ask how well has the market pricing this change at the Forex market? Because what you're talking about now, these are inelastic commodities.
Yes.
It's the rice, beans, sugar, cement. But what about the elastic commodities like maize, palm oil, tomatoes?
Well, we still have some weather conditions and production affecting prices of those commodities, as well as transportation cost and the high price of diesel. So we're talking about the commodities with import content. And generally, if you have that positive sentiment that prices of commodities with import content will reduce, domestic producers of domestic commodities will begin to kind of follow the trend of that and reduce their prices as well, all for competitiveness. So we would expect prices to actually carry on in its trend. We don't expect a massive a decline in prices because importers that imported these commodities with 199, now they have to get the dollar at 290. So it's all about companies responding quite differently to the new Forex price.
So we'll come back and continue this conversation in just a bit.
Okay.
Stay with us. Welcome back. Just to quickly wrap up now with Ada Akunubi, who is Senior Investment Officer with Financial Derivatives Company. So, Ada, we see further, do we expect to see further moderation in elastic commodities like the rice, cement and sugar? Is this a flash or, it's here to stay?
I think what people fail to understand is that now that we have this new exchange rate policy, we are looking at it from the demand side, but we're not looking at it from the supply side. If we still have low oil proceeds and our exports are not actually improving, this would actually have an impact on the value of the currency. So we'd expect to see volatility in prices. It's trading at 280 now, but if we don't, if we're not exporting more oil and having more forex inflows, we would see the currency depreciate, which would still affect prices of goods. So the market is quite sensitive to whatever is happening now.
Well, Ada, thank you so much for coming on the program this morning. Of course, we'll keep our eye on those commodities as well.
Thanks for having me.
So we're still talking about the new of FMDQ interbank trading, which actually started yesterday. I'll be joined in just a bit by Bosun Omofaye. And as I already mentioned, the market will continue to price in whatever the spot rate is coming from the FMDQ IFM market. Yesterday, we saw the Naira at 281. Naira 85 kobo, that's the Naira to the dollar. At the parallel market, it's trading at 340 to the dollar. But for the euro, we have it at 294 Naira 93 kobo, and at the parallel market, it's 380 Naira. And for the pound, 382 Naira 66 kobo, and 480 Naira at the parallel market. So the conversation will continue in just a bit. We'll try to get a clearer sense, because there's been a lot of figures quoted out there for what the Naira finished off at yesterday. Bosun Omofaye will try to help us put it in perspectives in just a bit. Stay with us.